All right, welcome everybody. Welcome to the part 6 of the Level Up Institutional Trading series. This is going to be a really good class. It's really going to put everything together when it comes to what we have covered. On top of that, it's going to give everybody a better edge when it comes to understanding the market. So just to quickly recap of what we did last week. Last week was part 5, and part 5 was a really, really good class. Because we focused on the macros, right? You guys wanted to learn more about the macros, how you're able to use the macros. For example, the 950 to 1010, the 1050 to 1110, the PM macros. And then on top of that, the different types of concepts that you're able to use every single day to get into a good position. Like, for example, here at the 950, 1010, more than oftentimes, is going to be a inversion fair value gap, or if not, it's going to be a breaker block, right? And those are different types of setups or models that we tend to look for when it comes to the market. Today, we're going to part 6. Part 6 is going to be completely different. And actually, I'm going to let you guys choose what you guys want me to cover first. So part 6, we're going to cover what's called the power of 3. The power of 3 is going to be is going to be talking more about the accumulation phase, the manipulation phase, and then on top of that, the distribution phase when it comes to the market. And we're going to talk more in depth when it comes to the anatomy of a candlestick. So many people speak about candlesticks, a doji, a hammer, or whatever the crap. Listen, you have to understand how a candlestick forms, and we're going to talk about that and how the daily candle forms. A daily candle forms every single day. How do you make sure that you are part of the expansion of that candle? So we will definitely go into that. And then lastly, we will cover breaker blocks, and we will cover more information when it comes to the in-person event that we have in Miami, Florida. Okay. So with that being said, quick vote in the chat. Drop a 1 if you would like me to cover the power of 3 first. Drop a 2 if you would like me to cover breaker blocks first. Power of 3 is a lot more information. That's the reason why I'm trying to give you guys the option here, because this will be a lot of information, but I am going to try my best, and I definitely want your feedback. I'm going to try my best to explain this in a matter that is layman's and makes a lot of sense. This is stuff that people do not get. I can guarantee you that right now. It takes years, maybe months if they were taught by somebody really, really, really good. But this takes months to understand. I'm going to try to do it in one single session. My only favor from you is to go back into the charts and back test. Without chart time, none of this stuff will work. I don't care who you go to for financial advice or trading advice or whatever. It will never work. The only way that you're going to get better when it comes to trading is if you put your own work and you put work when it comes to the charts. Same thing when you play ball. You got to put in the reps. When you play baseball, football, it's the same thing when it comes to trading. This is not a game. Trading is an art. So let's go ahead and get started. It's you versus you. Make sure that you always win. Power of 3 was definitely the top choice. So we're going to go ahead and go through that. 1 second here. Here we go. Okay, so a daily candle forms every single day. Every single day, a daily candle forms. You need to know how it forms. How it forms is the key. I think prior to going into your day, you also need to understand what is the daily bias, right? Are we looking to have a bearish day or a bullish day? How do you anticipate that? You look at the daily time frame, and you look whether or not the previous candle closed above the previous day high, or if not, if it closed above below the previous day low. That's how you're able to get your daily bias. So this is a candlestick, right? On the left-hand side, we have a bullish candlestick. When a candlestick opens, a bullish candlestick, it looks like this. It looks like the following. 1 second. I don't know why this is not, okay, let's see here. 1 second. There we go. When a candlestick goes ahead and opens, it's going to open right here at the open, right? Open right here, and it's going to put in a low. That low is basically a manipulation. So accumulation, manipulation, it makes a high. That is the distribution, right? So AMD, the power of 3, occurs on every single candlestick that opens, whether it is the 1 minute time frame, the 5 minute time frame, or whether it is the 1 hour or daily time frame. So for a bearish candlestick, it would open here. So open, It will manipulate higher. So open, manipulate higher, open high, and then it's going to make a low, and then it's going to finally close. In power of three terms is going to be, we have the open, which is going to be where price will accumulate, where the market makers are going to be accumulating orders, and then we manipulate towards the high, basically faking a move towards the high. All the retail traders are going to go for buys, and then price is going to be brought back down for the distribution or the expansion or price delivery. And then finally, we close right here. Drop a 1 if that makes sense. Drop a 2 if it does not. We have a lot of examples today, and I can guarantee you we are just getting started, but I definitely want to hear more from you. Okay, so I see 1s down here. Excellent, 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 excellent. Okay, excellent. So let's go into it in more depth, right? This is the anatomy of, I don't know why this is not, okay, here we go. There we go. This is the anatomy of a open high, low close. Quick quiz for everybody in the chat. If it is a open high, low close, is that a bearish or bullish candle? Drop it in the chat. Come off me if you want to. Bearish, I see that. I see Edgar saying bearish. Anybody else? Bearish, 100%, right? Same thing vice versa. If it is a bullish candlestick, it will make a open. It will then go lower. So open, low, high, close. Same thing, right? So here in this graphic here, when it comes to number 1, what do we have here? Well, we have that, I don't know why it's not letting me draw, but here we have a new candle opening. This is the open, right? On the second candle, we're able to understand that this candle right here, like this bullish candle right here, it opened, and then from there made a low, and then finally it went ahead and created that liquidity. I do want you guys to focus on this third candle right here. That is a bearish candlestick. That is the candle open right here. That is the candle open. Candle goes up, right? That is the manipulation phase of the candle. When the candle is forming, that is the manipulation phase. And then finally, it makes a low and it closes right there. That is the anatomy and physiology of a bearish candlestick. Now, how does this look like from a bullish standpoint? Well, here's a bullish standpoint. Open, low, high, close. As you can see, the open accumulates, right? The low is a manipulation, as you can see right here. And then finally, we get the distribution higher towards that drawn liquidity. And this happens every single day. Matter of fact, this happened today on NQ. If you look at the Asian session and you look at the London session, and prior to New York, this is the exact same thing that happened right there. Open high and low close is the opposite. So we open right here. We manipulate higher, getting a high, and then we close, and then we get a low, and this is how it looks. Accumulation, manipulation, which oftentimes when we manipulate, right, we are taking out liquidity, or we are sweeping liquidity, and we are coming lower. And then finally, we get that price delivery towards the downside. I'm going to show and explain one more graphic before we go back into the charts, and just quickly want to talk about what does it actually mean when it comes to AMD. So AMD, accumulation, we accumulate, we are accumulating positions to be able to set up a framework, right? Manipulation is basically where there's a smart money reversal. So we're trying to fake people out. Breakout traders, they get cooked all day there. Why? Because they think that price is going to continue, and they don't understand what liquidity is and how the market moves based off liquidity. And we need to be able to sweep liquidity or turtle soup to be able to get the price delivery. Lastly, distribution is the last phase when it comes to the AMD foundation or breakdown. And this is basically where the money is distributed and we get that aggressive trend or that aggressive expansion towards the draw on liquidity. I'm going to quickly go ahead and just change screens, and we're going to go over a couple of different examples that I think will really, really make it worthwhile for everybody to please just pay attention, because it will make a lot of sense. And again, you can apply this to absolutely anything, any time frame, any chart. And I'm going to show you how using this every single day, you can make money every single day, aside from all the sauce that I've been giving out when it comes to changing state of delivery, markets to shift, sweeps, etc. Right? So here we go. So I want to go ahead and go into the daily time frame, right? If you go into the daily time frame here, we can see that right now we're definitely in bullish order flow. But if we go one more up, let's look at the weekly time frame, right? So this right here was last week, right? Monday, September 23rd, right? And if we go ahead and let's say that that week never existed, and we look at the weekly time frame, what are you anticipating? I'm not going to get into buy there, but what are you anticipating? Well, I'm anticipating that right now price is coming into a bearish weekly fair value gap, right? Price went to the 50%. We are closing above the previous candle high right here, and we sort of cleared this one as well. So I'm thinking that right now I would expect to push higher, right? Or if not, another push towards the fair value gap if we are going to continue to reject. But how can you anticipate that, right? So if we were to anticipate another bullish candle, we would expect what? A open, a low, and a high, and then a close. So if I go down to the daily time frame, those that are on TradingView right now, I need you to please listen. I need you to go into indicators, and I need you to type in higher time frame, or if not, type in PO3, right? And under PO3, I want you to add this indicator right here by 2 degrees, not the one that is locked. This one, the higher time frame power of 3. Once you have added that, I want to see some ones in the chat because I want to see where people are at. But I can guarantee you, this will make a lot more sense. Drop some ones in the chat, and Edgar, I got you right now with the question. Indicators, higher time frame power of 3. Higher time frame power of 3. I got a 1 there. Anyone else, just know that it's higher time frame power of 3. Okay. When you go ahead and open this indicator, it's going to say time frame. For this example, what I want you to do, I want you to put in weekly, right? Weekly. Why? Because we are trying to see, we're trying to anticipate the formation of the weekly candle, right? And then what I want you to do is that I want you to click on OK, right? When I turn this on, it's going to give me the weekly time frame. And what do I see right there? This is what, Monday, Friday. Let's play one more, right? So this right here is Friday. Okay, so let's see what Monday did. So Monday opened, and the great thing about this indicator is that this indicator tells you the low. See, it maps out the low, it maps out the open, and it also maps out the high, right? So we opened right here, we made a bit of below. Let's see what the next day, Tuesday, does. Tuesday, we are anticipating a high, right? So we are now getting up higher, as you can see. Look how the formation of the weekly candle forms based on what the daily does. So based on what the daily does is giving us the formation for the entire week, right? Let's continue. Next day, we go up higher, we sweep liquidity right here, but we still managed to do what? We still managed to close above the previous day candle, right? So right now, this right here is our low. This right here is our highest point when it comes to this candlestick, okay? Let's see Thursday, another high, right? So right now we have open, low, high. What comes after the high? A close, right? So price comes down, it will probably come down Friday, and there's the close. And if we go back to the weekly time frame on NQ, that's exactly how it formed, right there. If that doesn't put a better lens, some Versace lens on you, then I will reiterate. Let me know if you need me to reiterate. This is just one example. I have a lot more examples. But what I am trying to say is that if we are anticipating a bullish week, what should we expect? We should expect that either Monday or Tuesday, price is going to do what? Open, come down, and then we're going to expand. Right? So based on the anatomy of a candle, you're able to know, and your own daily bias, you're able to know what to expect Monday and Tuesday. So let's take a look at this week, right? So if we go to this week, if we go to this week, what happened? We opened right here. What's our low? Our low was yesterday's low, Tuesday. Today, yeah, we didn't really close, we didn't really get above, but we open low, high close. And where's price going on? Listen, price is going where? We have a big fair value gap right here. So tomorrow, do not be surprised if the market pushes. Tomorrow is the expansion day. Wednesday and Thursdays are going to be your expansion days. Monday, we accumulate. Tuesday, we went down, open, low. And then Wednesday, Thursday, we're trying to go up higher, and that's where we expand. So if we take a look at here at the weekly candle that's being formed right now, what is the drawn liquidity? Well, it's very clear. It's right here. That's where we're going. Right here. That's the reason why I called out that 420 call for Microsoft. Very simple. Right? So let's go to another example. Now I'm going to take it from the 15-minute time frame and then using the daily candle. How do we anticipate today's daily candle, right? So today, this is the candle that formed today, right here, right? So I'm going to go ahead and go to yesterday, right? And then what I'm going to do, if I want to anticipate the daily candle, I have to go down to the 15-minute time frame, right? So on the 15-minute time frame, this is how things look, right? This is Wednesday, October 2nd. So I'm going to go ahead and let just price go. Let's see what price does. Price goes, excellent. Let's go ahead and speed it up a little bit. Price goes, excellent, 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 excellent. Opening price. Right here, okay? Let's stop right there. I'll give you guys this indicator later on, but I'm just gonna turn it on for right now. This right here is the opening price, the midnight opening price. So I'm gonna use that throughout the entire day. Aside from that, I'm gonna turn on the reserves. And so far, the Asian session is doing what? Are we accumulating, manipulating, or are we distributing price? What are we doing here? Accumulation. So you guys want to get into trades, but you haven't even understood what the Asian session do. What did the Asian session do? What did London do right after? That's why we emphasize so much on the highs and lows of each session. That is the reason why we created the reserves indicator, because it tells you the high and low of each single session, because those are going to be your liquidity targets. So here we go. It's about to be what? 1 a.m., 2 a.m. is when the London market starts. And what do we see? Boom, 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 boom. Excellent. I think I have it set to 3 on mine. Yep. Here we go. London session, still accumulating, right? It's about to be 7 o'clock in the morning. Let's see what happens. So far, I understand that we just are accumulating. So if the Asian session accumulates, the London session or even New York will probably do what? Manipulate, right? So let's continue. Excellent, 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 excellent. Boom, we get a high, right? Right here. Let's stop it right there. Hopefully stop right there. Okay, excellent. And this is where, what did the market do right there? Well, at 8:30, which 8:30 is a really critical time, what did the 8:30 candle do? Manipulate. Telling people that we're going where? Oh, sweet, back down. So accumulation, manipulation, and you got to understand, price is always going to leave behind these low-hanging fruits. That's the reason why at 9:30, price came right here. After the London low, which we called it out in the VIP chat, this is where price went to, because price went ahead and swept the 13:30 candle from Tuesday, right? So once price manipulates here, and we also manipulate down here, what is price set to do? Well, price is set to distribute. And all you got to do is what? All you got to do is what? Find a good entry using the other concepts that we talked about. For example, inversion fair value gap, fair value gaps in general, unicorn setups, which I will talk about that, breaker blocks. I will talk about that today. All you got to do is just find a good entry using the foundational institutional concepts. Look, even if you would have bought right there, what's the clear drawn liquidity? Right here. And what is that? That's 4 contracts. Sorry, 8 contracts. That's 20,000 if it would have hit. So let's see what happens. There we go. That's 15 minutes, 30 minutes, 45 minutes, 1 hour. Excellent. So 20K an hour. I think that's pretty good, right? So that's how you're able to use the accumulation, manipulation, and distribution framework so that you understand exactly what to expect during the intraday setup for the New York session. Let me give you guys another gem. Here we go. The reason why I was able to call out NQ short right at 9:31 after the market opened is because of this. This is the midnight opening price, right? Price went to a liquidity point and went back into the range. What does that mean? Price is respecting, and this midnight opening price is serving as what? Resistance. And that is the reason why I got into short, and I knew that we were going to go back down here to the London lows and also these relatively lows that were down here as well. So you could use the midnight opening price whenever price is above the midnight opening price. This is a gem right here. Whenever price is above the midnight opening price and we are bearish and your bias is bearish, that's where you want to get in, right? So let's go ahead into the 5-minute time frame or even 1-minute time frame. And let's see how this would have worked. Here we go. It is 8:59. And by the way, you can trade before 9:30. You don't have to wait till 9:30 to be able to trade. There's always opportunities here, right? And what do we see? Price is respecting the midnight opening price. On top of that, what could I have used as my entry? Well, we got a huge fair value gap here that if we invert, price is telling me where it's going to go. And what do we see? Right here, we invert. As soon as price comes back into the inversion fair value gap right here, I'm entering sales all day. And what am I going to target? Well, I can go ahead and target, if I want to be conservative, I can target this right there. Boom. That's what, 920 with 4 contracts. I could target this right here, 1400 with 4 contracts. I can also target what? The 8:30 opening price. And as you can see, or if not, I can go ahead and target the London low. But I would rather have you trade and target the nearest liquidity point because that's going to hit no matter what. Why? Because price can easily come like this and never hit the London low, and then you'll be mad the entire day. I would rather have you go for the nearest liquidity target. And what do we see? Price goes down, boom, 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 boom. Excellent. I'm still not. There's no reason why you should be scared of the trade. Why? Because it never even came back into into that inversion fair value gap. What else could you have used as an entry? Right here. That's a change of state of delivery. We have opposing candles. What does that mean? This right here is a order block. We have opposing candles. Price closes below the opening price. That's easy money all day. Drop a 1 if this makes sense so far. I'm going to go back into the candle and I'm going to talk about a couple of other stuff. But this will help you. I'm telling you, once you go back into the chart and you're able to go like this, like for example, if I go back into the 15-minute time frame just quickly, right? And I just go back. And you can even do it with the level of reserve. Listen, put on the reserves indicator and just go back, right? So this is what 25th of September. And what do we see? Asian, this looks like a distribution, right? So now we have what? We have this liquidity. And what do we also have? Asian high right here, right? Price comes here. London comes right here. And what does London do? London sweeps out the Asian low. That already tells you that price wants to go, head up higher. If you don't like these type of entries, then wait for an inversion fair value gap. You don't have to get perfect when it comes to the entry. I would rather you to get perfect with it, but if you want a safer one, as soon as price does what? As soon as price inverts, mind you, I don't trade London session. I should trade London session, but as soon as price breaks above it, what does price do? Price comes right back to it. And I'll show you exactly how this stuff works. Here we go. Price comes here. We invert. If we invert a fair value gap, we are what? Changing order flow. We invert a fair value gap, we are changing order flow. So even if somebody could have gotten it right there, and as long as you're able to hold that drawdown, you're pretty much good to go. But if you want to get an institutional entry, you would rather wait for what? A retracement. So that right there, I don't know, whatever. That would have been a perfect way. And again, I could target this right here, but ideally I want to go ahead and target the Asian highs. And let's see
Chris, I
what.
have a question.
Yes.
Why are you targeting the midnight price as opposed to the 6 p.m. when the market reopens?
Great question. That's a really good question. People have used various different ways. Like I do have some people that they're using the 18 o'clock line. I have back tested the 18 o'clock line, and I have also back tested the midnight opening price, and I have seen a lot more confluence with the midnight opening price. I would love for you guys to back test it as well, but I think the midnight opening price is a lot more how would I say, more accurate when it comes to the price models. But based on my own back testing, it works better that way, if you will. Excellent. All right. Let's go ahead and go back into the Canva. We still have a lot of stuff to cover. But just kind of I really want this stuff to really hold, because this will make a lot more sense when it comes to your trading. So here we go. We back to it. Accumulation right here, right? Manipulation right here. Accumulation, manipulation, expansion. That's exactly what happened today. Manipulation, accumulation, manipulation, and expansion. And sorry that this stuff is in Spanish. I'm also getting ready to create materials for the Spanish-speaking community as well. Here we go. Accumulation, manipulation, expansion. That happens every single day. Asian session, right? London session. And then, of course, we have here New York session, right? So here's one thing that I really want you guys to understand today. If you guys look at the low that was formed at 9:30 today, that's the low for the entire day. And that was a Judas swing, if you will, like a manipulation, if you will. Aside from that, I think it's really critical for you guys to understand that this is the best entry model, or the best profile when it comes to the Asian session, the London session, and of course, the New York session. We accumulate, we manipulate, and we distribute, right? So I really want you guys to start thinking it as in this way. Let's say, for example, the London session does not manipulate, right? And New York doesn't distribute, right? Instead, London will accumulate and New York will manipulate. So you got to understand that there's going to be times where the Asian session already distributed, and by the time it gets to New York, the market is consolidating. And that's why we're saying, yeah, no more trades for today, because there's no liquidity, there's nothing, right? So you got to understand what is the daily profile of the Asian session, and on top of that, the London session. So here I have a couple of different profiles. Shout out to Dang Strat from Twitter. He has really good graphics. Highly recommend you guys to follow him as well. But this right here is a Asia range. So the Asian session will range or accumulate. The London will manipulate, and then we get a New York reversal. This is a classic buy day. This is exactly what happened today, where we had the opportunity to catch that unicorn model at 9:30. I will explain what a unicorn model is in just a second, right? So this is something that I really want you guys to study. You guys should have access to the Canva, or I think if I did not give you access, please let me know. But please do not change anything that's here. We definitely want to keep this intellectual property how it is, right? Next, we have when the Asian section expands and London accumulates or consolidates, and then we finally get the New Year continuation. But as you look at these different profiles, what matters the most? The liquidity. Look at that. That's liquidity right here. What happened right here? That's a sweep. What are we going to target? Opposing liquidity, right? What's right here? This is also liquidity. This is also what? Liquidity. And what is price doing? Price is targeting that Asian higher low or low, right? And then price is doing what? At 9:30 New York open, price is going to continue, is going to sweep and then continue. I really want you guys to get to a point where you guys study these different profiles, where you already know Asian accumulated, London manipulated. We're looking for a classic buy or a classic sell model, if you will, right? And then something else when it comes to this is that when it comes to the profile and the London kill zones, if you see that there's an expansion move during the London session, that basically means that the New York session is not going to be high probable. Like there's not going to be a lot of volume for the New York session. So whenever you see that London expands, like we had a higher high, a big trend during the London session, which will more than likely look like this, for example, just quickly. No, see here, no, see everything accumulating, accumulation, right? Accumulation, see, expansion, right? Accumulation, right? Accumulation again, right? So more than oftentimes, they always accumulate, right? A little bit of expansion there. But whenever you see that London session expanding like that, just know that the price is not going to move how you would want it to move, right? And this right here is expansion, a bit of accumulation, and finally we got a bit of.
Are you showing your screen? We're only seeing
No, sorry about that. Let me go back 1 second. Here we go. Can you see now? No. Here we go, right? Expansion, a bit of expansion, not much for New York, right? So knowing that helps you out. London session accumulation, what does price do? We manipulate and we go up higher, right? So those are things to look out for when it comes to the daily profiles of both the New York session and on top of that, the London session and also the Asian session. What I really want to teach today, again, aside from this, is the breaker blocks. So let's go quickly into breaker blocks. I think this is something that will really help you out because breaker blocks is probably the #1 PD array. It's probably one of the strongest PD arrays. And you're going to see that this makes a lot more sense. And once you learn how to identify a breaker block, I truly believe that you will be a menace in the market, right? So what is a breaker block? A breaker block, essentially what it is a failed order block, right? Whenever an order block fails. So how does that look like? Let's take a look at this just real quick. Just follow me right here, right? This right here is a order block. That is the last green candle before we had a set of consecutive red candles. Aside from that, what makes a order block high probable? It creates a fair value gap. And as you can see, we have a fair value gap right there. Now, what happens here? Price expands, right? So price expands, boom, 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 excellent. And then price comes right back down. It probably hit some sort of PD array or if not a liquidity point. And price comes down. And what happens right here? Can someone tell me? What happened there? What happened in this candle? Why is this candle so important? Drop it in the chat, come off mute, whatever you want. Why is that candle so important? Think about the order block right here.
We close below.
We close below. So if we close below, it means that what? That this bullish order block, that order block is now a failed order block. So now this becomes basically same thing as the inversion fair value gaps. That becomes like a bearish zone or becomes resistance. And what is price always going to do? Price is always going to come back to the breaker block, right? So this will be a negative, a bearish breaker block. So it'll be a negative BB, negative breaker block. And what does price do? Price comes down. And what do? We make money. Price rejects, right? Here's another graphic of how this looks like. Essentially, for a bearish breaker block, we have here a higher high. Price forms a higher low. Within this higher low, there will be a order block, right? As soon as price comes back and we close below that order block, right? This is the break right here. This now becomes a breaker block, a failed order block. It used to be a bullish order block. Now it's a bearish breaker block, hence a bearish kind of order block or bearish zone, if you will, right? So price comes back to it, and that's how you're able to get that optimal entry. Okay, let's continue. Another example. Higher high, higher low, and we get a sweep. So whenever there is a sweep of liquidity, there will always be what? Come off mute, drop it in the chat. When we sweep, right? When we have that smart money reversal, there will always be what? A breaker block. There will always be a fair value gap right here that failed. There will be a protected low that's considered a market structure shift. There will be probably that same green candle will create a change in state of delivery. Everything works together. Everything works together. That's why when you guys are seeing market structure shift, change in state of delivery, fair value gap, the market is telling you there's a trade. optimal entry right now. That's what you're seeing because that's how the market moves. When the market sweeps out liquidity, it will create a market structure shift. It will leave behind a breaker block. It will leave behind a fair value gap, right? And when you have a breaker block and a fair value gap that overlap, that's called a unicorn model. And that's a high probable model that barely fails, to be honest. So let's continue. Again, this right here is red candle, red candle. You want to take the last candle, and then in that last candle, you want to add a shade just like that. And what do we have? Higher high, higher low, order block right here. We fail to continue up higher. Hence, this is a sweep of liquidity. Price comes down, breaks below the opening price, and what happens? Now, this becomes a bearish breaker block, and price will give you that optimal entry every single time. All you got to do is be completely patient. Bullish order block, right? What do we get? Lower low, lower high. Within that lower high, you will have a order block. It may be 2 green candles. It may be 1 green candle. I want you to take, if it's 2 green candles, I want you to take the last green candle, shade it out like that. And if price closes above it, what are you going to get? A breaker block. And what do we have right here? Can someone tell me, what is this right here? Just quickly.
Fair value gap.
Fair value gap. And that's when you know you are trading with the market makers and you are waving at them. Why? Because you know exactly how the market works and how the market moves every single day. Here we go. Let's take a look at a couple of entries that we've been able to perfect, right? As you can see, this was liquidity right here. What does price do? We get a sweep of liquidity. So this right here is actually a lower high. So lower low, lower high. And what do we see? Another lower low. This last green candle is our what? Is our order block. As soon as we close above it, it now becomes a failed order block. And now that becomes a breaker block. And what do we have right here? Fair value gap. Price goes up, does a whole bunch of clown stuff, and then it comes back down and it gives you the optimal entry. That's why, honestly, there's times that I don't even look at the chart because I know where price is going, that whatever wicks it wants to do to scare you, it doesn't even faze me no more. Why? Because with this type of confluence where you understand that this right here is a liquidity sweep, we just had an inversion right here. That's your first thing. Right here, what do we have? Market structure shift. What do we have right here? Breaker block, fair value gap. You got the golden rules to everything to let you know that you are in a optimal trade. What time frame do you use to create the order blocks? I use every single time frame. Every single time frame, I use it. And I'm going to show you how today was completely perfect when it comes to the breaker block setup. Here we go. And by the way, I'm also going to show you how everything that we have taught as part of the Level Up series, everything works hand in hand. So let's go first into the 1 minute time frame, right? And what are we seeing right here from the 1 minute time frame? Well, if we go back to the 15-minute time frame, what I want you guys every single day to do, every single day you come to NQ or whatever you trade, I want you to go to the 15-minute time frame. And I want you to ask yourself first, here's the first couple of questions. I'm going to put it before 9 o'clock. And I want you to ask yourself a couple of questions. What did Asian do? Okay, accumulated. Okay, excellent. What did London do? Well, a bit of manipulation there, a bit of a sweep. So that lets us know that price does not want to continue going up higher. Done. That's all that I care about for right now, right? Aside from that, outside of the Asian range, the high and low, and the London session, the high and low, what other liquidity points do we have? Well, we have this right here is also liquidity, and this right here is also liquidity. So far, I have all of my liquidity points. Mind you, I'm missing previous day high and previous day low, which I can also add that. I always use that as confirmation, but I have enough targets here to give me more than enough confluence, right? So I'm now going to go down to the 1 minute time frame. And as you can see here, 1 minute time frame, what do I see? Price is currently above the midnight opening price. So like I told you guys before, you could have used a simple fair value gap. a simple fair value gap, or if not, you could have used these fair value gaps of here if price were to go to it. So at this point, all I'm doing is just waiting. Here we go. All right, boom. Comes back into it, we get into a sell. Even right there, I'll still get into a sell because I know price is going to go lower, right? Boom. Price goes lower, boom, goes up, right? Change the state of delivery right there. And then finally we get our, let's see, our entry. Boom, right there. Excellent, right? So now I'm looking to see, I can clearly tell that price wins London low, but I also want to see what is price going to do at London low. And here we go. Price continues, right? Goes up, boom. Price just swept out London low. What do we have right here? That's an order block. I don't care what anybody tells me, that's an order block, right? So if we want to continue heading lower, price cannot go above that. That is the last opposing candle. That is a order block. Trust me, folks will tell you about an order block. They don't know what the hell they're talking about. Trust me, that is a order block. So me, I see that, and I'm already telling myself, I am not going to take any long trades unless I see body closure above the opening price of that green candle. So what do we see? Goes lower, excellent, goes lower, excellent. Now I'm interested. Why am I interested? A couple of different reasons why. What do we see right here? Inversion fair value gap. That's number one. What do we see right here? Change in state of delivery. That's number two. I'm telling you guys, change in state of delivery right here. Just give me a second because I'm telling you, I'm going to dissect this to a point where this will make so much sense. CISD right there. Excellent. What time is it? Can someone tell me what time is it right here? Why do we care about this so much? Anyone?
It's a macro time?
It's a macro time. It's a macro time. This is all happening prior to the 950, 1010. Do you guys see how everything is coming together? Everything's coming together. We just talked about macro times last class. 950, 1010. Right? And I told you guys, if you guys want to minimize your losses, listen, everybody and their mother got strategies. Everybody. Hedge funds have strategies and they fail all the time. I work with them listen, I work with hedge funds all the time. And they are fine-tuning their strategies every single day. What I want you to do is focus on a model. If we know that 950 to 1010 are optimal times for you to get a trade in, why not just trade that macro for a month? I challenge you to trade just that for a month, and I can guarantee you, you will have a lot more success than the last 2 years. Why? Because you are sticking to a model, right? So here we have inversion fair value gap right here. That's number one. On top of that, we also have market structure shift. What else do we have right here? We have another inverted fair value gap. So now we got overlapping PD arrays, right? What else do we have? On top of that, what is this? We just talked about this. Someone, please tell me. That right there. And actually, let me just go ahead and put this right here.
Closure above the opening breaker block?
Breaker block. That's a breaker block. Beautiful, 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 beautiful. Great work. That's a breaker block. So now, if I quickly go ahead and just put now positive BB, that's a bullish breaker block. What am I waiting for? Optimal entry. So we have breaker block and a fair value gap. Breaker block and fair value gap plus fair value gap equals unicorn model. That's probably one of the most high probable institutional models. And I'm going to slow it down here a little bit because I really want you guys to see the retracement back. Right? Boom. And just right here, you can get it for entry because you already know that price is not going to come down here and violate these fair value gaps. There's no way. There's no way. And what can you target? Well, 4 contracts, that's 5,000, 5K day. Not bad. Here we go. Comes lower, excellent. There we go. And now we just chill. We chill. Boom. That is how you're able to put together everything that we just talked about. We took one trade right here based off the opening price and change the state of delivery and inverted fair value gap off the 1 minute time frame. On top of that, what do we see right here? We also see that price rated and did a sweep of London lows. But where, not only did it go to London lows, where did it go to?
Previous week low. I mean, previous day low, I think.
Right here, you got it. Tuesday, right? So that's why you should always look for those relative lows that are hanging below, because price will always go down and go to those. So that's the reason. Yes, we swept it, but on top of that, we also swept this liquidity down here. And honestly, anybody could have entered right here off of this right here, and you would have been up at least 200 ticks in less than what, 3 minutes? This is how you're able to use macro times. That's how you're able to use fair value gaps, order blocks, change the state of delivery. You're able to use open, low, high, close, open, high, low, open, high, low, close, to be able to understand how you can put all these things together. That's how simple it is to use a breaker block. And a breaker block happens all the time. It happens all the time. And today was definitely a perfect example of that actually happening.
Are there any indicators for that? So like we could kind of visualize it, so we can learn it. And,
that's a really good question. I'm gonna tell you something. I get pissed every day. Those that trade with me and those that I talk to throughout the day, you guys know how pissed I get. A lot of these trading view indicators, they all suck. Some of them are good, but some of them don't really paint the full picture. And what do I mean by that? What I mean by that is, like, for example, you will find an indicator on TradingView that might paint this fair value gap, but it's going to miss all the other ones. What is the point of that? So that's why we're building institutional algo. Those that have the level of algo, we are working something out to make sure that everybody favors. Those that come to the institutional trading event, you will have it as part of your ticket price. So we are actually creating something for it, not just breaker blocks, but I also want to show you guys something else. If you look at the inversion fair value gaps, those are very, very powerful. All the indicators, including the ones from Lux Algo, I respect that company all day. They're doing great stuff. They don't really paint the full picture. So that's something that we're also working on right now. Drop a 1 if you guys want me to show you how just you waiting from 9:30 to 11 for an inversion fair value gap, you can make money every day. Honestly, you can teach this to your daughter. I'm teaching my godson now. Hopefully, I'll be able to teach my son in the next couple of years and stuff. But this stuff is not hard. Honestly, trading is hard, but the hard part is you. The hard part is you controlling your emotions. The strategies and stuff, it's very easy to make money. So here we go. Let's go to today. Let's go to the 5-minute time frame. By the way, the best inversion fair value gaps will happen on the 5-minute time frame. And I'm just going to show you that even if you wait till 9:20, and let's say at 9:20, this is all that you have to do. Liquidity, right? Of course, you also want to know these fair value gaps because price can always go ahead and bounce off of them. But just right here, I just want to wait for the first fair value gap to form after 9:15. Here we go. What do we see? That's one fair value gap. All I am doing is going like this. I'm not doing anything else. Here we go again. That was an entry right there. That was one trade right there. One trade. Okay, let's continue. It's what, 9:30. Let's continue. Price goes lower. Price goes lower. Price goes lower. Price goes lower. What do we see right here? What is this right here? That's a fair value gap, right? So all I am doing is just putting it out. That's it. I'm just letting price do its thing. Drink your coffee, your tea, whatever, and I'm waiting for the first inverted. Okay, price respecting the bullish order flow. Let's continue down. Continue. Let's continue. What do we see right here? Another fair value gap right here. Okay, I want to see if price is going to invert that. Nope, not yet. Not yet. Not yet. Okay. Let's continue. Let's continue. What happened? What's happening right here? Price doing what? Inverting, right? You can get into a buy right there. Or if not, if you want an optimal entry, get in at the 50%. What am I going to target now? What is price letting me know? Price wants to go up higher. Simple. We inverted. I don't have to talk about no fair, standard deviations that people are talking about now, candle rate, CRT. I'm just looking at inversion fair value gaps. That's it. That's my model, right? Mind you, that's not my model, but I'm saying it can be that simple. The problem is that everybody wants the shiny objects. Oh my God, a new strategy. Stick to yours and fine tune yours and refine yours every single day and get to it, right? So what do I see right here? I could target this right here. That's a low resistance liquidity, 5-minute time frame. I could put my stop loss even right below this candle. And let's see what happens. Let's see what happens. Boom. 10 minutes, 3,900. Drop a 1 if that makes sense. Drop a 2 if you think you could follow this every single day and not deviate. Because I'm telling you, this happens every single day. Anybody give me a day. Give me a day. Any day in the chat. This happens every day. But no, everybody want to complicate themselves. They want to talk about all this complicated shit. Focus on one thing. That's it. If it's fair value gap, it's fair value gaps. If it's turtle soups, it's turtle soups. If it's market structure and waiting for a fair value gap, cool. I'll show you another model right now. Here we go. I want you guys to go to Fusion. I showcased this in the last class. Okay. All we are doing, we are waiting for a market structure shift to happen. I'll do July 11th in 1 second. All we're doing is for a market structure shift to happen and for us to get a fair value gap. Okay, excellent. So let's go back. Okay, what do we see right here? What do we get right here? Market structure shift. Not only do we have a market structure shift, we also have what? A change in state of delivery. Okay. Not every single time price is just going to give you what it wants, right? Like, and just come down and come down and come down. It's not going to work that way. More than oftentimes what the market makers are doing, they're coming back again, of course, to fill in inefficiencies, right? But they're also here trying to trap traders because traders probably think that we're going to go up higher, right? But no, we have a market structure shift and we got a fair value gap. All we have to do is what? Wait to see how price reacts to that fair value gap. That's it. Anybody can follow that. I don't care what your IQ level is. Anybody should be able to follow this. Here we go. And that was your entry right there. And look, that was a crazy move down where? To another fair value gap. Right? So you can honestly wait for a market structure shift and a fair value gap to happen, especially after liquidity has been swept. If liquidity has been swept, this can be your model. Here we go. Liquidity sweep. All right. Market structure shift, fair value gap, entry. What's your target? Opposing liquidity. That's it. Done. Opposing liquidity. This is another model. And how does the model look? I'll show you right now. And I've talked about this countless of times, but please just trust what I'm saying. Trust what I'm saying. Here we go.
A question for you on this. If you're finding this on the 5-minute, do you use a smaller time frame for entries, or are you using your entry on the 5-minute?
Yeah, you can use your 1-minute time frame for entries and stuff like that. Like for example, for 1-minute time frame, you got to use the 15-minute time frame. 15-minute time frame aligns with the 1-minute time frame. If you want to use the 5-minute for your entry, then use the 1 hour. But I typically go down a time frame. But honestly, there's times that price is showing you the hand on the 1-minute time frame. Like it's now, and Mike and Yoel and Aaron and Martin, you guys could definitely attest. It's now that I'm starting to like do time frame alignment. But I just feel like if you have your liquidity points and you know about fair value gaps and higher respects, you could trade off the 1-minute time frame. Of course, it's always good and important to have that higher time frame context and narrative. But the 1-minute time frame gives you everything, or even the 5-minute time frame. Okay, but this right here is the model, right? We have what? Liquidity sweep. What is this right here? Market structure shifts. Price goes up. What is price going to leave behind? Fair value gap, fair value got coupled with a breaker block, and that's going to be your high probable setup. Drop a 1 if that makes sense. And then we'll go into the example for July 11th. This, I'm telling you, please do not overcomplicate yourself, all this craziness, especially on Twitter. Twitter is great for information, but you could definitely go down a rabbit hole where now you're shifting gears and you're never getting anywhere. Shifting gears all day, shifting gears. No. Stick in one, listen, stick to one lane and try that lane out for 30 days and journal. Listen, I journal every single day. I'm not joking. Every single day I journal. I do not play about my trades. Why? Because I'm trying to get better, not just as a trader, but also when it comes to how do I actually manage my risk and my emotions when I get into a trade. Okay, so let's go back to July 11th and let's see if TradingView even allows me to backdate that long. But here we go. Here we go. So July 11th. Okay. Here we go. July. Okay, July 11th. I'm gonna go right here. I'm gonna go July 10th, and then I'm gonna go down to the 15-minute time frame, and then go ahead and go into July 11th. Right. So here we go. Perfect. Boom, 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 boom. Once it gets to like 9 a.m., I'll stop it, and then I'm not even gonna look at nothing, no context. I'm gonna hindsight, right? So we're gonna do hindsight. I don't care about whether or not the midnight opening price is below or above. I'm gonna show you how you can get this done every single day. It's that simple. Here we go. So right now is what, 3 o'clock in the morning. So London session. Let's see what happens here. Okay, goes higher. Goes higher. We have liquidity right here. Let's see what it does. Okay, expands. Expands. Hopefully stop right there. Stop right there. Okay. I just stopped it, but it kept going. Here we go. Here we go. 8:45. Okay. 1 second, because trading will be tweaking sometimes. 1 second, 1 second. Here we go. 9:15. Here we go. 5-minute time frame. I don't know what the heck is going on here, but what am I going to do? I want this right here. Why? Because that's obvious liquidity right here. Boom. I want this right here because this is what? This is also obvious liquidity right here. The time is what? 9:10. So all I'm doing, I'm just laying back and I'm just drinking coffee and seeing whether or not something gets inverted, right? So nothing yet so far. We do have a fair value gap right here, a small fair value gap right here. And then on top of that, we do have a fair value gap also right over here as well. It was already tapped in, but if we get a body closure below it, it's still considered a inversion fair value gap. So here we go. We get inverted right there. Okay. This is the inversion, right? So I want to see at this point, if, as you can see, price is closing above it. Price is closing above it. I want to see if we get a candle outside of this range, and then I will enter sells. If not, there's also here another fair value gap, which you guys can see that is now becoming bullish, right? And we also got a sweep down here. So honestly, I'm now betting that price is going to head up higher. There we go. And that was definitely the trade, right? And why did I catch that trade? Well, I called that trade because this right here was a 5-minute fair value gap. It was just inverted. I can even come down here and I can use this bit of an order block for support. Now we have an order block on top of a 5-minute inversion fair value gap. This will never get touched. This will never get touched. I do not expect price to come back down here, right? So ideally, your entry could have been right here. Your entry could have been right here. And what's going to be your target? Well, that's a low-hanging fruit right there. All the way to the top, that's also a low-hanging fruit. So I'm going to go ahead and get in with 4 contracts. I'm going to put my take profit right there. My stop loss, I really want it very, very tight. So I'm going to put it right above, or if not below, that candle wick, which you really got to be careful with that. Not saying that this model was going to work 100% all the time, but I can guarantee you one thing. It will work. It will print you money. I know that for a fact. And where does it go? Right to our target. Our target continues. And then price just expands the entire rest of the day. Okay. What else do I also want you to look at as well? If we go to the 15-minute time frame, right? And we just open and we just have here open. What do we have? Open, low, high, and then it probably close somewhere around here. So I'm also using the anatomy of a candlestick to also let me know where price is going. Anybody has another date? Any other date? You can honestly wait for a fair value gap to get either disrespected or respected, and it will give you a trade. It will give you a plan. So that's what I have for today. I know that it was a lot of content today. I really want to make sure that everybody gets it. So please come back to the recording. Those that are going to watch the recording, back test as much as possible, whether you're creating your own model, whether you're using the open, high, low, close, whatever you're using, make sure you back test. And then on top of that, for those that all you want is a simple model, like you don't even care about anything else. Listen, you have too much stuff going on right now. Use this 5-minute inversion fair value gap and make money every day and run it up. I want you guys to print money and run it up every single day. Or if not, you can use the market structure shift with a fair value gap and you will still make money. That's how flexible all this stuff is when it comes to the market. Okay. By the way, I really want you guys to take a lot of attention here. These are macros. These are
that fusion macro. Indicator you were using. And can you share that canvas?
Yeah, this is just if you go here, MSS and then Fusion, it's going to be the first one here by Trendtex, 10x. That's a really good indicator. It gives you market structure shifts. It also gives you fair value gaps, all those different things.
Hey, Chris,
when it comes to the
looking at your Canva.
Yeah. Oh, sorry.
Oh, I thought you were showing the indicator.
Yeah. Sorry, you're right. I'm over here shifting these different windows. 1 second. Here we go. Right, so we go right here, and then MSS Fusion, and it's just going to give you a market structure shift with a fair value. That's all you need. That's all you need. I keep saying this. That's all you need. Do not complicate your life. Do not complicate your life. I'm telling you, I have spent every day from the day that I wake up. Listen, from the time that I wake up to the time that I go to bed, I'm here in this office, working, studying, all types of stuff. And I have studied practically almost everything aside from standard deviations when it comes to this whole ICT, or if not, institutional edge. And I can guarantee you a lot of it is noise. A lot of it is a lot of noise. And what I would want you to do, and I beg you to do, is to stick to one model and try it out for 30 days. This entire series showed you guys everything from the foundational standpoint. All you got to do is just put it together and just backtest. So that's how it works. Okay, just one thing here quickly. Yeah, go ahead.
Hey, Chris, before we get into the event thing, I'm gonna drop the playlist link into the chat. So right now it has parts 1 through 5. If you have not watched all 1 through 5, go to this link, save this playlist, make it your Bible. If you've already watched 1 through 5, save this playlist, make it your Bible, and watch it again. And then part 6, it takes YouTube a ton of hours, like 4 or 6 hours to buffer and process. So today's lesson will be up by tomorrow at the absolute latest for everybody to view. But this is public. Chris wanted to make this series free against my recommendation. He wanted to make it free for everybody, so that's what we're doing. So this is permanently free. You can share this with any and everybody. But yeah, there's your playlist.
100%. Yeah, thank you for that, Aaron. Please go back. Please take notes. This stuff will never click unless you medicine. Go to Barnes and Nobles and get you one of these, and just take notes and draw stuff out. The only way that this stuff will work and it will inject, and you can inject it into not your conscious mind, but your subconscious mind, is drawing all this stuff out, drawing what a breaker block will look like, drawing what a fair value gap will look like, drawing what an inversion, drawing what a turtle soup will look like, right? This is how it works. I'm going to share the Canva link. Please, everybody, my only thing, actually, I can put this so everybody can view. Here we go. Just don't do anything to the Canva stuff, because I put a lot of work into this. It's hours and hours and hours of research to get these graphics that make sense. and that, you know, we hopefully can put it into layman's term. That's the main thing, is to make it simple enough that everybody can be able to understand how to trade this way. And that's what we're going to do. Talking about the trading event is going to be a lot. The trading event is going to be a lot more hands-on, practical. I can't think of any financial influencer or whatever that will do the stuff that we do. Nobody teaches stuff from a practical standpoint on having a lab exercise, you know, putting yourself in a certain scenario. We're going to have labs and lab trainers that are going to work with you on day one and also day two to make sure that you perfect and you understand these different concepts. And then hopefully you walk out with a model that you go ahead and you stay militant to every single day for the next 30 to 60 days. And we are going to have people that are going to follow up with you after 60 days to make sure that you're good to go. You're also going to get an institutional algo. You're also going to get an institutional journal, which is going to help you better understand the concepts that you're also trading. And honestly, this is something that I'm really taking very, very, very serious. I'm barely sleeping and I do not care, just because I want to be able to create walking ATMs where you are able to enjoy your life and you're able to escape the system that we live in, and you're able to enjoy with your loved ones everything that you want to enjoy, and you want to create the life that you want for you and yours. So just to give everybody more heads up, just quickly, Miami won the poll. So Miami won the poll. So we're going to go in Miami. It will be November 9th to the 10th. Right now, we're going through the whole logistics of what's going to happen. I should be sharing out the agenda of what's going to be covered when it comes to the event later this week. But Miami did win. It will be 2 full days. I'm sorry for those that do not like the 2-day events, but like I keep saying, this stuff is so much information that even if you try to couple it in one day, it wouldn't be fair to you. Why wouldn't it be fair to you? Because you're not going to grasp it. I would rather have a whole full day of knowledge, and then that Sunday, that second day, we do more hands-on stuff. We do lab exercises. We have an exam. We have so many different things. And I'm also going to bring a couple of my hedge fund partners so that they can speak and they can attest to the stuff that we're teaching out every single day. Any questions or comments so far?
Not a question, Chris, but just to add on to some of the stuff that you were saying. So yeah, we went back and forth quite a bit on how many days this event should be. And I guarantee you this 2 days is going to be packed full. This is not, you know, no shade, but shade. We're not going to have Dame Dash in there talking to you about buying luxury bags. Like, we're about to be in here really working, really teaching. You will lead these 2 days with every tool that you need. So please be assured that this is not something, like Chris said, is being taken lightly. There's been tons of conversations. There's going to be an insane amount of value included in this. And this is an event that Chris wanted to make sure that as soon as you leave that event, you can immediately implement the strategies the next day the market is open. So whoever wants to be there, be prepared to work, because we will be working, and it will be a truly transformational event. And as cliche as that has become with all these other events where people just try to upsell you, there's not going to be any of that. This is it. You will leave this event with the knowledge you need to immediately implement. So I put the sign up thing in the chat. Chris has the QR code up there as well. So however you want to do it, this will be the way that we can keep in communication with you all. Like you said, we're waiting for a couple things from the venue, trying to get back to make sure we have all that solid and everything is as perfect for you all as we can get it. So that'll be the way for us to keep in touch with you for whomever would want to attend.
Indeed. Definitely want to get everybody's feedback. Please drop it in the Discord free chat. Tag us on IG. And then on top of that, just give us quick ones. Was this helpful? Was today's class helpful? The breaker blocks, the anatomy, the candle science. Just put it to work. Put it to work. I'm telling you, your life can drastically change in 6 months. It could drastically change. And I believe in everybody. I believe in each and one of you. I've been through this journey by myself, taking losses every single day. Now we're at a point where we make 5K, 10K days. And this is, I mean, it's only up from here. And here's what I really want you to understand. If you create your own model, which, by the way, we are going to give out models during the event, but if you create your own models, don't you think you can automate the model? Don't you think that you can teach other people in your family about the model so they can start trading too? Or get your son or daughter to start trading and taking paper trades. By the time they're 16, 17, they're free. I'm telling you, what's coming. I think a lot of you guys saw it, and I'll stop the recording here. Thank you, everybody that saw the recording. Appreciate you. Much love. It's you versus you. Make sure you win.